All right, looking good. Let's get this stream rolling. Welcome back. Welcome back. Crypto Trend Trader with our Wednesday midweek market update. It is 8 p.m. Eastern Standard Time on March 2nd, 2022. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, let's go ahead and jump right in. So obviously had quite a bit going on this week. More escalation, casualties, everything like that. Unfortunately, heart goes out to anybody involved in that. And then we saw Biden's first State of the Union address for anybody that watched that. And then Jay Powell getting grilled today and basically just, confirming what we already suspected. So we will jump right into all that and get it rolling. What's going on, CW? Good to see you, man. Wednesday, it's time. So for anybody that didn't catch it, before we do get started though, I do just want to touch on one thing. The group is all full for right now. So if you want to put your name in the future, I can put your name on the waiting list, but I don't like having a bunch of people come in all at once. I like to give everybody a little time, get used to it, do the whole deal, spend a little time with people, etc. So I don't like to have a bunch of new members all at once. So as of now, group is closed. If you want to put your name on the waiting list, you can do that, obviously in the order that they are received. So, but don't message me if you're not serious about it, whatever. But I will put your name on the list in the meantime. But that being said, let's keep going. So anyway, obviously things are escalating. Russia, Ukraine, there's like a big convoy of, Russians waiting to basically take Kiev if they so choose. And let's not have any delusions of grandeur or anything. As of now, Ukraine has put up a fight. Europe and United States have sanctioned them. Germany has cut off the inspection of Nord Stream 2. But let's be real right now. If NATO doesn't legit step in and fight Russia, which I don't expect that they will do. If Russia decides to have a full scale assault, there's nothing that Ukraine is going to do. They will get absolutely mauled. There'll be tons of casualties on both sides, but there is no way. I don't care what the mainstream media says. I don't care what you're seeing on TV, what kind of hope propaganda posts you're seeing about how great Ukraine is doing and how they're fighting off the Russians. If Putin decides to full on attack, there's nothing Ukraine can do. And there would be mass amounts of casualties. So, and that's a fact. That's an actual fact. So just to make sure that you don't buy into the mainstream media, because at least here in the United States, they're pitching some pretty serious propaganda. That being said, I don't necessarily think that's going to happen. We'll have to see what happens. I mean, I don't know. Maybe it will. I'm kind of mixed on that. But regardless, big geopolitical, and just overall wartime risk right now. Obviously, nobody wants to be in a nuclear war. So now, as far as State of the Union, obviously Biden addressed some of those things. Overall, it was mixed. I mean, they had Biden pretty hopped up, so he was able to form some sentences. I mean, he was still a stuttering Stanley, but I think overall, he got most of his points across. The Dems were hopping up to their feet, doing squats, probably more than I've ever seen them do in their lives. It was full on propaganda. It looked like something out of, Germany, a little while back. I was expecting somebody to have a little mustache and everybody else to be chanting. It was super propaganda-y, probably the most I've ever seen. I would love to see the fact checkers on that one too. It was legitimately just an hour of straight up lies. I'm not trying to be biased here one way or the other, but it was literally just one ridiculous thing after another. So I'm sure there are tons of ignorant people that believed all the bullshit, but to a normal person, it was obviously total crap. CW says, I heard from a reliable source that Putin attacked Ukraine so that he could date AOC. Any thoughts? That sounds realistic, honestly. I heard she's in high demand, and pretty much no matter what happens, anything has to do with people just wanting to like desperately date her because she's super hot. I mean, obviously, right? According to her sources. But yeah, I mean, if you haven't watched it, I suggest you watch it. There was some. All right, let's be real. This was a pre-planned speech from probably like months ago, pre-written, and instead of like changing it to be relevant to what's going on, they just basically talked about Ukraine for like 5 minutes at the beginning. It was the same BS. It was like, let's stop inflation. Biden provided all kinds of like cures to our problems. He's like, oh, it's the businesses. They're charging too much for the stuff. So they got to pay people better. So they just pay the people better and cut their costs. And then everybody's happy and stop passing down prices to the consumer. And like, honestly, like anyone with a, like probably like junior high school education, or if you're in the United States, maybe like college level education, probably would understand that, it doesn't work like that because paying people is part of your cost. So you can't like take money from your left pocket and put it in your right pocket and say, oh, look how much more money I have now. Same money. It's the same money, dude. Absolutely ridiculous. And it was the same thing with the jobs. They're like, oh, we created 5 million jobs. And it's like, you created 5 million jobs, or it was just the 5 million jobs that we lost when everybody was ordered by the government to stay home. It's not really creating jobs. It's more just like, hey, everybody don't go to work. Hey, everybody just go back to your same job. Like, I don't know. That to me is not growth. It's just coming back from a huge deficit. Anyway, the whole thing was just total propaganda. It was a total joke. The economy's strong. The consumer's strong. We're going to cut healthcare costs. Everybody's going to get Medicare. Everybody's going to get free college. What else? 50% off childcare. Free money for everybody. It was just full on propaganda. And then he's like, we got to just get stuff done. Everybody get stuff done. Well, let's be real here. Let's be real here. And then we'll move on to some technicals and stuff. If you couldn't get anything done with the House and the Senate and the presidency, you have everything. You have everything. You can control Congress and control the presidency and couldn't get anything done. So what's the likelihood we're going to get anything done from here on out? Let's be real. It's zero. It's 0% chance. Once the primaries get closer and closer, nothing's going to get done. Powell's not going to do anything drastic one way or the other because he doesn't want to seem biased one way or the other, obviously. So that's the final point we'll talk about. If you watch Powell today, get grilled. It was basically just same stuff. The Dems were pitching their agenda. The Republicans were pitching their agenda. They're talking about how, people are making more money, so it's beating inflation. And then Powell's like, oh, that's like the lower rung of the ladder. And then like the middle, like 4 rungs after that are all like negative. Inflation's going up faster than wages are going up. So they're actually losing. And it's like, yeah. But the people on the bottom, they're doing better. True or false? And it's like, all right, we get it. You just want him to answer your question and not actually explain or like speak in truth. Powell made it very clear that they're sticking to their agenda. They're going to let the balance sheet, they're going to stop their buying, as they've been saying, of mortgage-backed securities and treasuries. They're going to not necessarily sell anything off the balance sheet, but let assets run off the balance sheet so they have constant expirations on the balance sheet. Balance sheet went up to, Fed's balance sheet is at like almost 9 trillion, 8 trillion, something like that right now. They're going to let things run off the balance sheet. So basically normally what would happen is they would allow things to expire, but then they would just replace them, with new. They would cycle out the old and in with the new. So what they're planning on doing now is essentially as they have expirations, as things mature, they're going to just let them run off. So as we see treasuries maturing, instead of buying more treasuries to replace those, plus buying the treasuries, plus buying the mortgage-backed securities, they're going to no longer be buying more mortgage-backed securities, no longer be buying treasuries, and then they're going to let some of the expiring treasuries like run off the balance sheet and not replace them. Now, what speed that's going to happen at, we don't know. But remember, there's like multiple switches in this switch from like 0 to, 100. where they all have the same effect. Like if you have a bathtub and you're putting water in the bathtub's going to fill up. But if you open the drain on the bathtub is going to drain out. So you have, water coming in and water going out. And if you start to change the balance of those things, like you turn off the faucet, but you leave the drain the same, eventually all the water drains out. Or if you leave the water on, but you open the drain even more, the water is going to drain out faster. So the level is going to go down. So think about it as a bathtub, and there's multiple factors in how much water is going into the bathtub and how much water is coming out of the bathtub. And that will help you get a better idea as to what's taking place in the market. So even though they're not technically selling anything off of the balance sheet, assets running off the balance sheet means there's less buying. So it has the same effect as selling. So when we see them stop buying mortgage-backed securities and treasuries, and then we see them letting treasuries run off the balance sheet by not buying them, that's two tailwinds or two headwinds against the market. And then the same thing with raising rates. If they then raise rates on top of that, that's like a third headwind into the market. And it's just these things stacking up and stacking up. So they're not net selling, but they're also essentially net selling because they're not net buying. So if we look at it like that, and then we know on top of that, they're going to run off the balance sheet, which is, there's extra $4 trillion on the balance sheet. So I don't know how long it's going to take them. I don't know how far they're going to get it before something breaks or they stop doing it or whatever. But let's be real, there's an extra $4 trillion. So even just to get back to where they were before the pandemic started, they have to dump $4 trillion or let $4 trillion worth of assets run off the balance sheet. So essentially, whether they sell them directly into the market or whether they just don't rebuy them, there's $4 trillion worth of headwinds onto the market, running off the Fed's balance sheet over whatever indeterminate amount of time, nice and slow and steady, et cetera, et cetera. So no matter how you look at it, it's a big fucking deal. That's a big deal. $4 trillion is a lot of money, so I mean, we'll see what happens. We'll see what kind of pressure it has on the market. He made it pretty clear that they were going to stick to a quarter-point hike. This wasn't going to stop them from doing the quarter-point hike in March, but that they weren't going to do anything drastic. So don't expect a 50 basis point or 25 basis point, 50 basis point hike. So, they're basically going to have the Fed funds rate at 0, and then they're going to add, 25 basis points to it. So what is that going to do? It's going to do absolutely nothing. Like, there's literally not one single company, entity, or person in all of the world in existence that is going to be like, okay, now that the Fed funds rate has gone up from 0 to 0.25, everything changes. I'm just going to change my whole game plan. There's literally no one in existence that matters to. So when inflation is raging at 7%, probably going to come out with our next inflation CPI reading at probably 8%, 0.25% is like an absolute joke. So, but again, remember what I said way back when, not way back when, what was it, a month ago? What did I say about Powell? I said Powell he's been married for, since the 1985s, okay? And let's just say that he used to have a lot of bedtime fun with his old lady. And the bedtime fun, well, that's the inflation, okay? And things haven't been going so great for Powell lately. He hasn't been able to get his bedtime fun. He's been talking about it his whole term. He's been talking about how he wanted that inflation. He wanted a little bit of that bedroom time, okay? He hasn't been able to get it. Can't get that inflation. They wanted 2%, okay? He wanted just a little taste, a little bit of that inflation. Now, all of a sudden, it's his birthday. And by birthday, I mean the pandemic. And all of a sudden, they've got this inflation because of supply chain constraints, because of monetary policy, because of fiscal policy. And now look what's happening. Powell's sitting back, relaxing, got his pants around his ankles, and he's getting his inflation blowjob. He's getting that inflation BJ. He's not going to just cut it off the second he starts getting it after waiting since, the 1980s to have a little fun. No, he's going to sit back. He's going to enjoy it. He's going to enjoy that inflation. He's going to, say for a year plus, oh, it's transitory, it'll go away. And then he's going to say, okay, it's not transitory. I was wrong. We can't just keep saying that anymore, but we do think it's going to subside. And then if you listen to him yesterday, you hear him again. He's like, now we retired the term transitory. He's like, but we do think that it's going to subside by the end of the year. We do think by the end of the year the inflation won't be as bad as it is now. So it's like, I mean, everything is year over year numbers. So if you say that long enough, of course it's going to go down. So Powell's just sitting back, pants around his ankles, living the good life right now, okay? He waited a long time for this. The Federal Reserve waited a long time. He's been, waiting his whole term in office trying to get that 2%. And now they're sitting here at 7, 8. Who even knows? Shadow Sat's 15%. You think Powell's ready to just bust his nut and cut this thing off and go about his business? No, he's living the good life right now. Let the man enjoy it a little bit. Jeez. Oh my God. Lazy boy, what's up, brother? Good to see you, man. How do you think Russia isolated will affect the market? I mean, because of the sheer amount of fertilizer, wheat, corn, oil, natural gas that comes out of Russia and Ukraine, I would say it's probably really bad for everybody. Really bad for everybody if they don't resolve this situation. And if you didn't like the inflation before, just wait. Asotos, hi everyone, good to see you, brother. And then Lazy Boy says, I'll never look at the bathtub in the same way. Jesus, that's it. I need some inflation with my wife. Yeah, man. You don't just cut that thing off. But anyway, so you get my point. They've been waiting forever for this. They finally got it. They got their inflation. It's running hot. They're not in a hurry to just cut it off. If he was really worried about inflation and wasn't just jawboning, he would not raise rates by 25 basis points. He would. Now, granted, you don't have to say, okay, inflation's at 7%, so the Fed funds rate needs to be over 7% or over 5%. Or whatever. No, it's just a fact of the matter that it has to be up higher than it is now. It can't be at 0. So that's the issue. But I mean, again, if you wanted something forever, why are you just going to cut it off when you finally get it? Because people are worried. No, you're going to do whatever you can to stall. They're in a stalling pattern right now. Now, this is how things get out of control, though. Once the inflation genie comes out of the bottle, people get scared. It starts getting worse. And then on top of that, we got this Russia-Ukraine situation. I mean, it's just going to escalate. It's going to get bad as hell. It's not going to get any better. I mean, it's about to just get out of freaking control. I mean, if you're one of those people that doesn't need oil, aka gasoline, you don't need any natural gas, you don't need any rice, any corn, or anything that uses fertilizer, you'll be fine. You'll probably barely even notice. But if any of those things are useful to you or your way of life, you could be in trouble. There could be some potential trouble in the future. So, I mean, obviously, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I would be listening to Biden right now, okay? I would be cutting my costs, sitting back, and I would be taking my time with things right now, making smart decisions, making sure that I don't have any high interest loans or anything. If you got a mortgage at 2.5%, 3% for 30 years, who cares? That's great. You got, a car loan at 2%, 1.5%, whatever. Sure, that's perfect. Great. But if you have any high, interest, debt, credit cards, anything like that, I would be taking care of all that stuff. Because we really don't know what's going to happen potentially going into the future. And at this point in time, I mean, we've been looking at the 210, and let's be real. I mean, it's less than 40 basis points away from inversion. So while we have literally them saying we don't see any signs of, a recession in the future, we're literally seeing the 2 accelerate towards the 10, go absolutely parabolic. It's literally about to cross. I mean, it's inevitable within a couple of weeks. I mean, it closed the gap. 25% of the gap was closed in a single day. So, I mean, 3 more days like that and it's over. It's crossed. I mean, and then what, within 6 months to a year, maybe less, recession? I mean, not to mention, I mean, you guys know the 4 horsemen, the yield curve inversion, transportation, semiconductors, and then, of course, energy spiking. And what is going on right now? We're seeing probably the biggest commodity bull run / energy spike, in most of our adult lives if not our entire lives. So not looking good right now. I mean, it's looking good like a potential blow off top in the markets, but not looking good for like people that are not prepared for it. So, but anyway, let's jump into some TA. We've talked about a lot of these like macro topics, what's going on here. You guys have a pretty good idea how I feel about everything. I don't see, here's the thing is, they're talking about the supply chains are starting to like get caught up and open back up and, this, that, and the other. Who cares? Who cares? If the supply chain opens back up and the bottlenecks are fixed, but now all of a sudden the supply itself is cut because all those important things are coming from Russia, it's the same thing as having a bottleneck, just the bottleneck's in a different spot. It's like if someone's standing on the hose and then you're like, hey man, get off that hose. You're cutting off the flow of water and no water's coming out. And they're like, oh, I'm sorry. And they like take 3 steps to the left and they're still standing on the hose, just in a different spot. So now instead of the hose being blocked off at the ports where all the stuff's coming in or wherever your current bottleneck was at, now it's just in a different spot. So does it make any difference? No, it's still a bottleneck. It's just in a different place. So, I mean, Putin has all the power right now. He has all the power. I don't care what anyone says. I'm not a Putin apologist or whatever, but I mean, the dude has nukes. So it's like, oh, well, other people have nukes too. And it's like, sure, mutually assured destruction. Great job. So we either all die or no one does. That's awesome. Great job. So it only takes one to make a big deal. So we know he has at least one. So he's got a lot of power there. So he's at least as powerful as anyone else because of nukes. And then on top of that, you're like, well, he also has a massive amount of the oil supply of the world, something like 12 million barrels a day in oil, a massive amount of natural gas. So basically he has like all the control over Europe. And then on top of that, between Ukraine and Russia, they are a massive exporter of, fertilizer, wheat and corn. So that's everything that everyone needs. So if we do go to war, or if he does decide to just stop exporting because he's pissed off of sanctions or whatever, so all of a sudden now there's shortages of oil, there's shortages of natural gas, there's shortages of fertilizer, which grows everything, there's shortages of wheat, and there's shortages of corn. So people will freeze to death, people will starve to death, and prices will go through the roof and no one will be able to afford anything. And then also, he has nukes too. So I would say he's pretty damn powerful right now. He also has a massive army, a massive landmass, and a ton of people. So I don't really see how people are like, oh, he's weak. Look at his weakness. Ukraine's fighting him off. Everybody's fine. Don't piss off NATO. Like, it blows my freaking mind. And like, I don't want to sound one-sided here, but let's be real. Like, we want to de-escalate this situation for Ukraine's sake, for the entire world's sake. So anybody that's out here like banging the war drums, just really think about what you're asking for. That's my honest take on the whole situation. So Lazy Boy says Ukraine is a huge producer of neon gas, which is used for computer chip production in the US. Yeah, I mean, there's tons of stuff, man. It's like palladium, the neon gas, and then we have, yeah, I mean, there's all the issues on top of that with China and Taiwan. And I mean, China's just sitting back right now. She's just like sitting back, just like laughing, waiting to make his move. You know what I mean? It's like you're playing chess against somebody and they're just like smiling at you. And then all of a sudden they do like, some move and checkmate you. You've never even seen it coming. That's what I picture going on right now. I mean, like this is best case scenario for China. China's already growing in power compared to the whole world. And then on top of that, now it's like, oh, now look, everybody hates Russia instead of me. It's like a supervillain in a movie or something. It's absolutely insane. Isn't China heavily invested in Ukraine? I mean, everybody's heavily invested in everybody. There definitely is some stuff going on between them, but a lot of like US and Europe is heavily invested in like Ukraine and Russia as well. So yeah, uranium. I mean, there's so much going on, guys. So much going on. So best case scenario for everybody is, that this all just de-escalates and just, goes back to normal or as close to it as possible. Yeah, exactly. I got you, Sotos. I got you. So anyway, let's jump into some TA and take a look at what the technicals are telling us. But there's just a lot going on the macro right now. And, you know, that's a lot of my point here. You know, I talk a lot about defensive trading and investing, and number one priority obviously being like protecting your principal. Right now, in my opinion, number one time to do that, because there's so much uncertainty and we see the volatility in the markets right now, and we don't really see much trending. You know, there's very few things actually trending right now. Most things are just like in a range or deciding between bear or bull, basically like fighting to, you know, either go bullish or bearish. So looking at the TNX, we obviously had a massive dump initially, that fear trade, and then push back up the 821. Basically found support at our previous top. So again, you know, nothing unexpected right here. This is basically our breakout of our pattern. We hit our next Fibonacci extension target literally to the dollar. We're coming back down. We're retesting the breakout. So we have a breakout, then we have a retest of what was resistance. We would expect to act as support, and now we expect continuation. Now we could easily consolidate here for a bit, but in my opinion, I mean, what's really happened? You know, we broke out, we put in a new high. We had some basically like bearish divergence kind of showing up right here. The bearish divergence played out. We had a retest back to the upside. This goes sideways for a little bit, whatever, it doesn't matter. And then eventually we go back to the upside, you know, and start to complete our measure move. So, you know, you guys know, obviously I have quite a few various targets up here, but we already touched the 786 of the internal retracement from the top of the 2018 high right here, all the way to the bottom at basically zero on the Rona dump. So the next target is the internal retracement 886 in yellow, which is like 2.57. So that's what I'm expecting. You know, not in a hurry to get there, but again, looks very bullish to me. Looks very bullish to me. And then U.S. oil, obviously. So we've been watching this ascending, broadening wedge, and there, you know, there's obviously two ways this can break. You know, and at this point in time, you know, we have broken out of the top of this channel. So not only did we tag our next target to the upside at 97, call it 100. That was what we expected, was to hit 100. Been saying that forever. Been saying that since $30 oil, when other people were calling for $12 oil and green energy and all that bullshit. We were talking about $100 oil. And then after that, the next target was $114 oil. So we're already at 113.36. So, I mean, I'd say call it target hit. I mean, we're still 58 cents away. So maybe we don't get there. I don't know. But I would say target hit. So this red box has literally been on the chart for, I mean, I don't even know how long we've had this up here. We can go back and look. It's been literally eternity since we put this up here. I mean, I don't even know. It's been over a year. So we hit our target to the penny, you know, from over a year ago. I'd say we'll count that as validly touched within 60 cents. And I mean, I'm not convinced it just doesn't go any higher after this. I don't think it's just over now. Sorry, I hate this chart, so I have to like get kind of goofy with it. But now what we are paying attention to, and the key thing that we really have to keep an eye out on, is this. The reason this resistance here, and this really is our target for like a potential top, is this was our top here in 2011. This was our top here in 2012. And then it was the top here in 2013, before the big breakdown, you know, after our obviously like previous all-time high. So this is serious resistance through this area. We're also very overextended. I am still very bullish on oil into the future, just because of, you know, failure to basically, God, I hate this chart, to basically invest, you know, over time. Basically everybody was like focused on this like ESG and the clean energy and the future. And, you know, you can't sell your car if you don't have a way to get to work. You still need to be able to get to work. So, you know, got to buy a bicycle first or get a bus ticket or whatever. But this is us basically just topping out at that same level again, at the 886, at our red box, exactly at our target. But let's be real here. Every time we have seen this on the monthly now, you know, this is our previous all-time high on oil up here at 150 bucks from like 2008. Every time we've seen this red area and the hard sell up here, that was at least a temporary top. So we see it right here. We see it right here again. This one was actually sort of a false alarm right here, filling out that cup and handle. But we also were not extended above the zero line. We were still below it. So that was like an internal move. Here we're well above the zero line, peaking. Here we're well above the zero line, peaking. That was a macro top. And now here we're well above the zero line, still going parabolic, but you know, we know what's going to happen eventually. Maybe not today, maybe not tomorrow, but very close to peaking. And we see that same signature right here. We leave the bullish control zone. We get the hard buy signal. We roll over, 2 red histograms in a row, 2 red histograms in a row, same exact signature, and then, you know, we crash. So, you know, looking at this right here, this is what we often get. This is the fake out. It looks like we're about to cross back to the downside, and then look, we get picked back up, we start pushing to the upside. So now what we're looking for on this signature is divergence. If this was to just roll over right now and then cross the blue under the pink, we would get a hard sell signal, just like this. But until we cross back down below 79, 80 level, that's going to give us our actual, like, leave the highlight zone and leave the bullish control zone. And then we'll look for, you know, just like we see right here, we see basically a peak and then a little peak and then another little peak. And those 3 points, let's switch back to our chart now. Oh, I hate this chart. Those 3 points correspond with, you know, different higher highs along the way. And then finally we capitulate from that level, hard sell signal, multiple red histograms, and we break back down. So that's what we're paying attention to for right here. We don't have to pick the absolute top to the penny or anything like that, but we know we're looking for that same signature. So we're looking for basically this to come up here and peak lower or even equal to this level at like 93.95. Let's call it 94 just to be easy. So we peak around 94. It rolls back over, crosses below the purple, because the purple is going to keep going up no matter what the blue does. So eventually they will cross. We will get a hard sell signal. You know, we could get it at 100 if it runs up. That's fine. But if we get divergence on the monthly right here, and then we leave the bullish control zone, that's going to tell us that the macro peak is in. And we went over this in the group, and I talk about it all the time on streams. But you guys know that energy price spike is like the 4th horseman of like the apocalypse. Like when we see an energy price spike come in, every time that was like a macro, you know, high basically in like the economy, markets, whatever. This was 2018. This was 2008. And then here's our 2000 peak right here. So obviously those were all big deals. You know, the dot-com bubble burst, the, you know, global financial crisis, and then, you know, potentially whatever happens right here. Now we know that the measure move from this Adam and Eve double bottom, the conservative measure move, is actually a new high, $165 barrels of oil. Now if it goes to 165, it might as well just go to 200. I mean, at that point in time, call it 165, call it 200. So if it doesn't top out right here, you know, it's probably just going to double top at 145. And then if it makes it back up to the previous all-time high, it's probably just going to run through that. So of course it's going to hit 166. So if it hits 166, might as well just go to 200. So, I mean, at that point in time, you know, once it gets to 200, it probably just goes to 250. So let's be real. I mean, I don't want to try to call the top on oil here, because this thing could absolutely go insane. Now we know this is a tough area to get through. We know this is overextended, but there's no reason this can't just go parabolic. I mean, it could easily run up to $148 a barrel in a single candle. I wouldn't be surprised if we did that in a 1 monthly candle at all. Because you got to understand, a lot of this is speculation. I mean, we've already priced in worst case scenario in the markets. I mean, to me, what we're pricing in on energy, on oil right now, what we're pricing in is all of a sudden Russia is completely cut off one way or the other. Whether they decide to not sell anybody any oil, export any oil, or whether sanctions stop it, or whether the existing sanctions stop companies from wanting to have anything to do with it, even if it's still technically legal. The market's pricing in basically a 6 million a day barrels of oil like deficit. And I think that, you know, the Middle East is basically waiting to see kind of how this works out before all of a sudden they kick up production. And even if the whole world gets together and says, hey, we got to fix this, you know, aside from Russia, obviously, we don't have an extra $6 million a day in barrels of oil that we can just pump out. So there is no way to fix this supply constraint. So before the problem was bottlenecks, now arguably, you know, it's a different type of bottleneck, but again, it's still just supply constraint. So there's no reason this can't just go absolutely parabolic. So the last trade I want to do right now granted, don't get me wrong, I'm taking profits on my energy trades along the way. But the last thing I would be doing right now is trying to pick the top on this stuff. But again, that's just my opinion. You know, I could be completely wrong, and maybe this is the exact top, and I called it perfectly, and I should have just come on here all cocky and said, I know it for a fact, but that's just not how I am. So we can look back at it later and say, holy shit, it topped out exactly 114. That's crazy. But also, I would not be surprised at all a month from now if oil was at $160 a barrel. Not even in the least bit. You know, but again, one move from the market, from Ukraine, from Russia, from Europe, from USA, any move could literally just change everything overnight. It could go either parabolic or completely crash. So we'll see what happens. But I mean, this is like literally like the one thing that's like trending aggressively in a single direction right now, confirmed in a bull market, like putting in damn near all-time highs. All right, so VIX is next. You know, and oil is obviously number one topic, so I'm spending a little extra time on it right now, and then obviously like current events as well. So VIX basically still putting in lower highs and lower lows, broken out of our descending channel, you know, basically consolidating here towards the top of the range. But again, you know, we see a higher close right here at 33.22 than our previous closes. And, you know, this is our, you know, essentially like highest close since we bottomed, but also it's our highest close going back to like, you know, what, January of 2021? So highest close in a year. So the markets are the most volatile they've been in a year. And I don't see any sign that this is done, like it's going to stop creeping to the upside. So when people are like, the bottom is in, Tom Lee's like, I'm bullish. It's like, no shit, you're bullish, Tom Lee? That's crazy. I never would have thought. I don't see any signs the market is in. When this starts breaking back down and losing key support levels, and we're no longer literally moving to the upside in a clear, you know, ascending channel, then maybe we could talk about it. But right now, I'm thinking it's more likely probably we hit our measure move breakout of the channel, which takes us back into the red zone, which is up here at like 52 is the measure move of the channel breakout right here. You know, and we can do a more conservative channel breakout for when we actually break out of this channel also. So maybe that takes a little while, you know, and then we break out of this channel. But by the time we break out of this channel right here, you know, the measure move is exponentially higher. Now, our previous like literal all-time high was like the CVD dump at like 85. So do we get that high? I don't know. I doubt it. But what do we know each one of these peaks in the VIX corresponds with? Let me switch to a longer time frame. I mean, what are these big spikes in the VIX? Okay, let's see. So this massive spike, we know what that one is. That's the Rona dump. Okay, what's this massive spike in the VIX? Oh, that's 2008. That's crazy. Global financial crisis. Who would have thought? What's this one? This is 98. Technically, it's not like right at the 2000.com bubble burst, but, you know, we get the point. So, and then obviously we see another pretty big one in 02. You know, and there's a couple more along the way or whatever, but we know when we get these massive spikes, something's up. So if this does play out, if we do hit this measure move, you know, that's probably going to be when we're looking to, you know, buy these markets. That's probably going to be this massive, you know, capitulation type event. So, and again, we're seeing we've left the bearish control zone. We got a hard buy signal. We're trending to the upside. We have a bunch of green histograms. Now we are at the slope line, but it's still blue here. So, I mean, we'll see what happens. But, I mean, everybody's trying to like pick a bottom and say this is done. And I'm like, man, this seems like a lot of negative things, or at least not positive things, or potentially like catastrophic things. It's not just like, oh, it's a Wednesday, you know, or turnaround Tuesday, I'm buying in. So Dow Jones obviously has broken down from key levels. We have our descending channel now. And at this point in time, we broke down from the channel. We were able to reclaim that channel. And then basically like bottomed on it again. So we basically had this little outlier right here. Is this the spring and now we're going to higher prices? Maybe. But at this point in time, we basically have two touches on the bottom, two touches on the top. This little outlier kind of candle right here. And we're at the heart line. We have confirmed into a bear market. The 200 exponential and simple both slope to the downside. So as far as I'm concerned, this doesn't look good. Looking at the weekly chart right here, we have crossed 821 and confirmed it. Now we did get aggressively bought up twice right here, which is a good sign. I do like to see that. we see a hammer coming in, typically that will be a bottom in markets or potential for a reversal candle. So that is good. That is definitely good. So we'll see how this week closes. If this week gets bought back up again, I will be much more bullish on a potential move back up to like 34.7, something like that. But the risk reward right now is to the downside, in my opinion. There's much more reward to the downside, compared to the risk, or much more. Yeah, it's the reward to the upside is far outweighed by the risk to the downside. That's what I was trying to say with my words, strung together in two sentences. And again, we've talked about this multiple times on the weekly. Every time we see this 821 cross, we have a relatively large dump afterwards, even if we get a pushback up afterwards, and then we eventually sell off. So we want to wait and see what happens here. We don't want to get overly bullish. We don't want to get overly bearish. But right now, this doesn't look particularly great to me. We obviously saw this coming because of bearish divergence on the weekly. And now here we see on the monthly, looking at the Dow Jones chart, we have back here in 2008, the 821 cross to the downside. Then we have right here, this was the Rona dump, the 821 cross to the downside, and we saved it pretty quick on the monthly here. Pretty quick. So we're not threatening that just yet. We're still in between that 8 and 21 on the monthly, kind of bouncing around, but we have lost the slope line. We are seeing, this is our third month straight of red histograms. We do have a hard sell signal, and we have left the bullish control zone. So we know that this was the Rona dump when that happened. This was that, 2018 time frame right here, where we had a decent sell-off, kind of double top, but then continued on up slightly. This was obviously like the 2014, 2015 high. We had a little, fairly aggressive sell-off right here in 2011. This was 2008. So we see each one of these led to a pretty serious sell-off. And I mean, the weakest one was probably this one, where we went down a little bit and then pushed back up, double topped, and then went down. And it wasn't that big of a sell-off, honestly, because we basically just went to higher prices after that before going lower. Still 18.6% though. So still a pretty decent sell-off in the Dow, which is obviously the strongest of our indexes. So really want to watch this one. I don't love how this looks. And remember, distribution takes time. And we're just starting like the potential rate cycle hike. And we're seeing oil prices spiking. We're seeing lots of warning signs. VIX potentially at super high levels, breaking out of a range that it's been in for some time. S&P, same thing. So we saw some bullish divergence off the low right here. Got a nice push back up. We have technically not confirmed into a bear market here. We still have the 200 simple with a positive slope. It's basically neutral right now. We retested 200 exponential. Need to reclaim 445. Or this is going to look like it's going to roll back over. So I'm not convinced we don't. But again, when we look at the longer time frames, we've got to be real careful here. Like when we look at that weekly, we're basically just sitting on this support level, depending on what time frame you draw it on. We're basically just sitting on it. We did get bought up pretty aggressively off of it, but we have momentum to the downside. We have a hard sell off the top of the range here. We have multiple drives of bearish divergence on the weekly. We basically topped out at the top of our green channel that we've been watching forever, like perfectly. And then if we switch to the monthly here, we could see we have been basically trending up aggressively since 2009. Obviously, that was our 2008 crash, pretty aggressively. And now we see ourselves distance from the 200 exponential more than we have been in this entire, decade leading up to it. And now here we see a hard sell signal trending down pretty aggressively towards that 80 line. So basically like losing the highlighted area. Multiple red histograms in a row, losing the 8, still kind of bouncing the 21. So, we're not screwed yet, but we're definitely seeing some early warning signs. NASDAQ broke down pretty aggressively, pushing back up, very much in a bear market. I mean, the 200 simple has kind of technically has a positive slope again, but we're so far down below it, unless we reclaim 14,748, we're basically not going to say that. I mean, we have to reclaim 14,750 or this is just going to roll over. I mean, that's all there is to it. So we have a very strong resistance here in red at that 14,150 level. We have the majority of the move has already played out. We already tagged the 236 perfectly on the first touch and then went lower. So I would expect this eventually to make its way down to the 382 at 11,515. It's already down pretty substantially from the high. The push down initially was 22%. We're currently down 15%. And my target's obviously like 30%. Initial target. And then we have to kind of reevaluate from there. So. And then the Russell obviously just looks terrible as always. Very much in a bear market, 200 exponential and simple. We did see basically a retest of that 236. I do expect it to go lower. Maybe it pushes up first. We've been talking about this forever. Potentially a move back up to the bottom of the channel, that 2,131. Since we broke down, we expected it. We didn't quite have the strength to get there this time. So I would not be surprised to see it get there this time. If we do start seeing something like this carve out a bottom though, it's not unrealistic to think that it basically turns into like a W pattern, and we basically have like a neckline of the W, and then we get the breakout of the W, retest the heart line potentially, maybe the 200 exponential and simple. More likely than not though, we probably underperform and probably get rejected with a pretty aggressive wick somewhere around like the bottom of the range. That's what I would expect to happen if we make it up that high. But realistically, the main rejection for a daily candle close probably going to be around 2,132. So, and then we look at this on a long time frame, and it looks absolutely atrocious because it went sideways for so long. I'm skipping the weekly. We're going straight to the monthly. I mean, this thing looks like absolute death. I mean, it went absolutely parabolic off the 200 exponential and simple on the Rona dump right here, and it's going down just as fast since the breakdown, since the distribution was taking place here from the top of the range. Now, it did slightly reclaim the 21, which is definitely good. That's definitely a good sign. But if it fails to reclaim that 21, if we do get down to the 200 exponential and simple, I mean, we're talking about the Russell losing like 40% of its value. Maybe 1,300, something like that. I mean, just from where we're at right now, say it takes a little time to get there. We're talking about another 36% to the downside. Talking about like 50% off the highs. I mean, so this is small cap, publicly traded companies. I mean, what does that tell you about the economy? The economy's strong. The consumer's strong. Everything's strong. We're strong. Biden's Adderall is strong. XLE. So obviously energy trending aggressively. Now there's an important thing that no one talks about how good energy's been doing. And remember, our trades were, basically uranium and energy and all that was like the big momentum bottoming out after like years of underperforming. And then, the main things we're watching going into this year or for this year, we're looking at potentially, the energy trade obviously is already playing out. We're already involved in that. But the trade we're really looking for is potentially gold miners and pot stocks. So that's what I'm keeping my eyes out on. Definitely still looking at those. But again, I would not be surprised to see, especially pot stocks, just continuing to carve out lows. But I'm just slowly building positions in those. Now, this was our peak in 2014. So we're still well off the peaks on XLE. Well off this previous peak. So, I mean, this thing could still run another 50%. Obviously it's lagging a little behind oil. Oil's not that far off of its peak, but as a matter of fact, let's go to a longer time frame. But we have reclaimed the 200 exponential, reclaimed the 200 simple, and now we're consolidating above that range. We have all the momentum in our favor. We're in the bullish control zone, powerfully moving to the upside. But we have to look at, how much juice is left in the tank on this on a monthly. I mean, we're basically at, this was an all-time monthly high right here at 94. This was an all-time monthly high, like literally the all-time monthly high at 96. And then the other big high we had right here was like 93.5. So on the monthly chart, going back to 2000 for XLE, like energy sector ETF, we're talking about 3 previous highs that were at this level or above it. So we're literally tying, basically these previous 2, and there's only one time ever this has been more powerful to the upside. And we know obviously that those highs corresponded with, massive macro tops on oil, at least temporarily. I mean, this is a pretty macro top, sells off and then goes higher. That's fine, but it's still a macro top, or at least an internal retracement on like a macro time frame. So again, I'm not saying oil has to just die here and that's it, but we're definitely getting to the point where this trade could easily have an aggressive pullback to retest some of this. But I mean, obviously, energy, was neglected for years, and now they're paying the price. So XTN transportation. So transportation been trending down in this descending channel. Obviously, is retesting 200 exponential and simple. Measure move for a breakout would take us up to like 98. We have that previous like kind of top resistance at like 92.50. Couple resistances along the way. Definitely building some momentum right here. Was losing momentum. Technically confirmed into a bear market. Retesting right now, consolidating at those levels. We'll see what happens. We'll see what happens. I mean, obviously, definitely worth paying attention to. XLF, financial sector. Broke down from key levels. Obviously not nearly as bullish. Obviously, the narrative that everyone's pitching about rates going up is like super bullish for banks. I obviously clearly dispelled that on our previous stream and went into depth about that. We're now below the moving averages, 200 exponential and simple. Looks like this thing is basically rolling over, but just inside of its descending channel. 2 touches on top, 2 touches on the bottom. I would not be surprised to see a retest back up here at like 40. But I do expect it to go lower and eventually back to like 35. Vanguard, emerging market ETF, still looks terrible. Broke down from those key levels. Tried to push back up after retesting our macro support here in blue. And basically just is getting rejected currently at the bottom of the range. Not unrealistic to think it reclaims this range and considers to just trend back down here. But again, does not look particularly good. Clearly in a bear market, especially on longer time frames. Matter of fact, I guess we can look at it. We do have a fresh month, so I don't mind looking at some of these monthly charts. So this is why it looks funny on that time frame. We have obviously the blue support, the blue support, the blue support. And then this was, an anomaly breakdown, whatever. But if we just draw from this point to that point, we have no useful data. If we draw like this, there's a bunch of useful data. And then obviously we have a clear resistance that we broke down below. So I think this is the way that it should be appropriately drawn. And this is basically a, spring or, anomaly breakdown, whatever. I don't disregard this, but at the same time, it doesn't do us any good to like plot from the bottom of it. So, I mean, it looks close to the 821 cross to the downside. Obviously, hard sell signal, left the bullish control zone, bunch of red histograms, red slope line. We're breaking down below the slope line. Would not be unrealistic to think we bounce the slope line for now and get a little pushback up here. But again, I don't think we get back above 50 on this. So we'll see what happens. But, this tells me emerging markets not where I want to have my money right now. And I mean, I broke it down multiple times about all these different countries or regions or markets, whatever, and why I wouldn't want to be in them. And that was before all this Russia-Ukraine stuff happened. And now look at Russia. The ruble is worthless. Their stock market is worthless and no longer trading. Their bonds are worthless. Ukraine is issuing bonds at 12% interest rate. Like, great. 12%. Awesome. What if you're not a country 6 months from now or a year from now or 2 years from now? Like, how much risk is there for 12%? I mean, I'd rather invest in GameStop. You probably have an equal amount that those two will exist in the future. No, that's not funny. I shouldn't say that. But I mean, the risk, it's risky. Let's just put it that way. Wouldn't want to buy bonds from a country that's potentially going to get, not be a country anymore. So DAX, so Germany ETF, again, very, very weak here. And I would expect Germany to be one of the weakest, behind Russia, because Germany is the one that really suffers from all this. Decommission a bunch of nuclear power plants, relying on Nord Stream 2 for all this oil. And now they were like caught in a weird position where they basically had to shoot themselves in the foot because they have all this pressure from Europe and the United States saying, hey, you can't certify that now. And they're like, yeah, but we need the energy. And then they're like, well, United States like, well, we had a deal. We agreed if Russia acted crazy, you couldn't certify it. And they were like, we did have a deal. And then you've got all, Europe coming after Germany, trying to make them out to be like, well, hey, you can't do it. But Germany is really the one getting screwed here. So, we're towards the bottom of the range, but I wouldn't be surprised to see another one of these guys. I mean, depending what happens, maybe it bounces right here. Maybe things look good again. But, I mean, Germany looks terrible to me. Like, fundamentally and technically. Looks absolutely terrible. Very clearly in a bear market, just completely melting down. This is the waterfall, as I refer to it. We break down below 200 exponential and simple. 200 simple crosses above. We get rejected off them a couple times, the reversion of the mean test. Put in continually lower lows and lower highs, and then eventually the waterfall. And what do I mean by the waterfall? It's basically the confirmed breakdown of like a trading range. So we're very clearly operating inside this descending channel, and then eventually we get the breakdown. And the breakdown is just, it's a bloody waterfall. You know, just imagine a waterfall, and then it's made out of blood. And that's what the chart looks like. So China, CN 50 to USD. You know, very much bearish. Broke down from the 200 exponential and simple, retested, and then again, we're just sitting on that resistance or that support line. And we know that even though there's a bunch of previously resistance acting as support currently off like this previous high, that previous high, and all of these touches right here, we know that this is a predominantly bearish pattern. And the likelihood of a breakdown, it doesn't have to break down. It could even break back up to 15,694 and then break down. But we know the likelihood of a breakdown right here is like over 66%. So I would not be surprised to see this thing breaking down aggressively. Don't worry about these. These are like crosses for when like the bearishness occurred. We were talking about on a different stream. I'm not talking about it right now. UK 100 looks still decent. The FTSE 100 looks pretty good for now. You know, considering everything going on, they're obviously having some nat gas struggles, obviously having some Brexit struggles, but overall, you know, still well above the 200 exponential and simple. Just consolidating above here long enough, the 200 exponential could potentially cross back up. Now, it doesn't look amazing, but as of now, it looks like each of these previous retests that just got bought up. So we're still putting in higher highs and higher lows. So on the macro, still looks good to me for now. You know, looks decent. Looks better than most. All right, let me jump in the chat here real quick, and then we'll keep on ripping through. Quinn Rivers says they're just sitting around at a Sunday picnic, twiddling their thumbs. It's a test in patience for me. Oh, you're talking about China. Lazy Boy said China can buy cheap oil and gas from Russia. Yeah, 100%, dudes. Definitely agree. Quinn Rivers says, I have just been sitting on... Oh, no, that was the one I just read. Oh, wait, no, you posted it twice. I'm not crazy. Okay. And then you said, I have just been sitting on my hands and not trading because everything feels really uncertain. Yeah, I don't think that's a bad idea, brother. Obviously not financial advice, but, you know, the best move sometimes is no move. And then XX Angel says, Bitcoin, huge head and shoulders once Bitcoin hit 50K. What do you think? I mean, we'll get into crypto, but it's no surprise how I feel about these markets, honestly. I mean, what was our last stream on Sunday night? Massive catalyst for crypto breakout. And what did we talk about? Sanctions and China and Russia potentially transacting in crypto to skirt said sanctions. And then what happened with crypto, Bitcoin? 20% pump. I mean, no surprise to me on any of this. You know, and obviously like the big uncertainty trade, you know, run to cash, dollars, run to gold, run to bonds, run to Bitcoin. Everybody's scared. Nobody knows where to run. Even at this point in time, energy, it's like, damn, it's tough to put money into energy now at ridiculous rates. So DXY still very, very strong. Just put in a new cycle high once again. Everybody's super bearish on it, talking about how terrible it is, and then new cycle high. Obviously, we do see potential rejection candle here, but nothing to be alarmed about. Still very, very bullish. It's going to take quite some time to chop through this area, in my opinion. There is a ton of price action that took place over years through these areas. So I think this will just be quite a bit of chopping and slowly moving up, retesting, moving up, retesting. But I'm still very bullish on the DXY. You know, and all the things that are, you know, in the basket that it's composed against or measured against all have severe headwinds. Tesla barely hanging on to 200 exponential and simple. It did get the retest like we discussed of our breakdown support right here. So obviously push straight back up to just under 895, but call it 895. Reclaim the 200 exponential and simple for now. Starting to build up a little momentum right here. Could easily push back up and retest 961. Would not be surprised, but doesn't look amazing to me right now. You know, typically when you come down to these moving averages like the 200, you expect a powerful rejection and then not to come near it again. So here we front ran it. Here we finally get down to it. We get rejected. We get a higher low rejection right here. And then we don't even come back down to it again after that. And then here we come back down to it. And then we come back down to it and break through it. That's not bullish to me. I mean, it's possible we still get a pushback up here, but this is not typically what happens. And then we just get a bunch of continuation to the upside. Now it is possible. Sometimes situations like that happen. You know, here we broke all the way down to the 200 simple and then saw a continuation. But here we pretty aggressively broken through it. So I don't love how Tesla looks right here. Net, Cloudflare, another one of the requests. So starting to look like a W right here, potential W double bottom. You know, I'd like to see these a little more symmetrical right here, but let's be real. I mean, there's a clear resistance right here at this like neckline of our W, and we're at it right now, which just so happens to be the 200 exponential as well. Right above that's the 200 simple. Excuse me. So if we break above, you know, 121 to 127, this should get the measure move, which depending on how we measure the move, whether you take the conservative measure move from this peak or you take the aggressive measure move from that peak, if we just take the conservative measure move and we take it to, you know, just the conservative breakout, which would be like these daily closes right here, that's going to roughly give you a breakout of 170, which is a pretty aggressive move back to the upside. But that would also just be another lower high. So it doesn't mean we don't break back up here and then get rejected and go lower. It could just get rejected and just roll over right now. But that's what the measure move breakout would be. And then, I mean, at this point in time, I think you could pretty safely say that this thing has topped out or potentially topped out. So, yeah, I mean, we're not the only one thinking that. Now, the real question is, though, it topped out. It came all the way down to the 382, which is technically a bullish retrace. So at this point in time, it could have bottomed out, too. So it might have topped out and bottomed out. And now it's breaking through the 236, which just so happens to be that same neckline. So if we do get that measure move breakout to the upside, there's a higher likelihood now that it's touched the 382 that it actually just goes to new all-time highs and continues to roll up. Now, I'm not saying that that's over 50%, but it's a higher likelihood than if it didn't get down to the 382, because the 382 is, you know, the most bullish, legitimate retrace for a macro Fibonacci. You know, just as easily could get rejected here and go to the 0.5 as it could just, you know, push back up here and go to new all-time highs. So if I was looking for a trade setup on this, I would do one more thing first. I would say, okay, if I'm going from the high right here to the low right here, what's our Fibonacci internal retraces and some key levels we could look for this to potentially top out at? They would tell us, okay, this is probably just an internal retrace and we're probably going to go lower. So what I would look for is, you know, we're obviously the 382 lines up with the 236 on the macro. So I would look at, let me pull this one out a little bit so that it's a little more readable for you guys. Hopefully that helps. Can make this one a little thicker too. So we see the 236 in green and the 382 in yellow are lining up at the same spot, which is basically that neckline break. So the measure move, and arguably we could say, well, let's put our measure move break from there then. So depending on how you want to do this exactly, how technically you want to be, somewhere around that area would be the neckline, measure move break, 200 exponential, etc. So if we do break out, you know, the 0.5 would be at the 200 simple on the daily, which is 131. The 618 would be at 148. And then the measure move would technically be at 162. So I would look for potential topping around those areas or potentially just taking some profits on the way. And then look for it to just put in a lower high and fall back over. But I would want to see that correspond with something like, you know, a weekly bearish divergence developing, or at least some kind of like shorter term, midterm bearish divergence developing. But at this point in time, this has momentum in its favor. It looks like the Stochs are about to cross to the upside from the neutral area. It looks like basically a higher low double bottom. You know, it looks pretty aggressively like a W pattern. I mean, this looks like a nice trade setup, actually, honestly. You know, if you were just going to take an entry off of this for a potential breakout. Now, it's already run so much up here. I would have to just put in, I would take a conservative target. I would put in a conservative stop. You know, man, it's really not that great of a trade setup. I mean, it's like 2-to-1, which is okay. But because the spread is so high on the stop loss, it kind of sucks. I mean, you could put like a 9 or 10% stop loss in, which is still kind of like cutting it tight. I would want to like go down below here. Yeah, it's really not that great of a trade setup. I mean, if I was already in a position on this, I would definitely be like looking for upside potential. But I don't love this setup right now. But I mean, if you just ran a super tight stop, put a super tight stop on this thing, it's not even, you can't even really get that tight of a stop because that big old wick. That was probably, let's be real here, okay? This wick down right here, this like 9% wick, that was a stop hunt, okay? It was basically taking out anybody that put their stop below that key support line, and then they wicked them out. They're out of the trade now because they were running like a 5 or 6 or 7% stop, and now it's going to run to the upside. So I would want to put my stop minimum past that wick and just accept that there's a possibility I could just get wicked out again. But at running like a 9% stop loss, what is it, 8.4% below that wick, below the 821 on like a confirmed daily cross, I mean, you might as well just call it 10%. Below the 821 on the daily cross down, I would get out. And then to the upside, I would take profits probably at that 618 for a 23% move, which is like 2-to-1, 2.36 to 1. But I would maybe close half my position after that move, or at least trail my stop loss up. And then I would have another target for if this thing has potentially bottomed out. And then if the market wants to pull back, it makes me take profits. If the market wants to keep running, you know, you're all of a sudden the risk reward looks way better because you're talking about 47% to the upside and 10% to the downside. So now you're looking at like a 5-to-1 risk reward ratio. But again, even if it was 1-to-1 with potential to be a 2 or a 5-to-1, it's not that bad. But I just don't ever like to take coin flip trades. I would much rather take a 2-to-1 risk reward. But this does look like it's going to break out to the upside. It really does. Has momentum in its favor. Stochs are crossing up. Blue slope line. All green histograms above the zero. 821 crossing. I don't love that it's here at the 200 exponential and simple. But at the same time, it's broken through key Fibonacci support / resistance. And typically, the same way I talk about when we come down to a 200 exponential, I don't want to see it get a pathetic bounce off of it. It's the same way with the rejection. When we come and put in a low, and then we hit the 200 exponential and we get the bearish like retest to try to reclaim it, and then we come back down, we put in a higher low. So we basically get rejected here and go lower, and then we come back and retest it again, and when we get rejected, we go less low. So less of a rejection. And then we immediately come back to it. So maybe it gets rejected again and goes less low again. But maybe this is the break. And if it just consolidates here for a few days, I think the probability of a breakout to the upside goes up exponentially. But I mean, let's be real. The way the markets work, you know, it'll be too late by then. It'll happen in after hours trading when nobody's looking, and there'll be a 23% candle. And then afterwards, they'll be like, it was the earnings. They're getting bought out. It's a merger. But I mean, realistically, you know, we're basically looking at some type of, you know, higher low type situation. Potentially topping out right here, rolling back over, finding support, and then moving back and completing the move. So that's what I would be looking for on net. Not a great trade setup though, but definitely looks like it's got a little potential. So SMH. So VanEck Semiconductor ETF. So, okay, we've been looking at NVIDIA and, you know, a couple others. Now let's look at the whole space altogether. So obviously we had our bottom back here in March, you know, and then we finally retested 200s here in October of 2021. And then we came back down to it again. And then we basically threatened that low. And then we pushed back up, reclaimed it, put in a lower high, and then we actually had that massive gap down, you know, the old like war scare, and we actually took out that low. So at this point in time now, this doesn't look good. Now we have a high, we have a low, we have a lower high, we have a lower low. We're below the 200 exponential and simple. 200 exponential has already rolled over. We did put in some bullish divergence between our points right here. So that was a nice little push to the upside. Maybe we even push back up to like 284 or something like that. But I suspect we continue to put in lower highs and lower lows. So we did reclaim the bottom of the channel, which is good because we kind of had like that little breakout measure move, hit our target, you know, turned out to basically be a failed breakout, like throw over, couldn't hold. And then we just came back down to that key resistance. And now that's acting as support. So maybe we consolidate here long enough. We push back up, hit the heart line, consolidate, and then we can start reclaiming this area. We can get bullish on it again. But right now, it looks more than likely like we just get rejected, come back down here again, and then eventually break down. And assuming that, now keep in mind that this green Fibonacci was a potential target for a long time that has been here with our measured move target to the upside. This is not something that I just drew in recently. This was our potential target to the upside. And look how close we got to that target. I mean, we made it to... where we at? We made it to $318.82. And our target to the upside was $324. So we got pretty damn close to the target almost perfectly. And obviously you see where the red box is at. You know, and again, that's been in there for months. That was our measure move breakout of the ascending triangle, you know, taking us to the target to the upside, which was projected based on Fibonacci extensions from our previous levels. So trading very, very technically. Very technically. And again, we see on the way up, this was our top at the 618. Before we had that drawn, we see clear 618 action. Then we break through the 0.5. And then we come back down, retest it as support. And again, this is before we even know where the top's going to be. And then again at the 382. And then again, we see a bunch of resistance and support at the 236. And then we break up above it. And we didn't quite come back down to it. So our next target to the downside is going to be the 236, which is going to be $240. Now, is that going to be the bottom? Probably not. But we will at least expect to see some kind of bounce off that level. Realistically, though, we're probably looking at like 202. But again, if this goes into a bear market, that's probably going to tell us the markets as a whole are topping out, as semiconductor ETF is basically one of the four horsemen. So we know transportation, we know semiconductors, we know the yield curve inversion, and we know energy spikes typically lead to, you know, recessions. And I'm not talking about just like, oh, just another recession. Shucks, market will be back in 3 months. Don't worry about it. Just look the other way. No, it's like our 2000 bubble burst, our 2008 global financial crisis, you know, and whatever's about to happen potentially. But I'm Tom Lee, and I'm bullish. I wish he was bullish on hitting puberty. What's wrong with that dude? NVIDIA, so obviously the strongest, one of the strongest in the space, looks slightly better, but again, just kind of consolidating at the 200 exponential and simple. We see here 200 simple is about to cross above. We're barely just sitting on them. That's not bullish to me. We should see an aggressive rejection. I mean, we should hit the 200 exponential and simple. Buyers should come in and say, fuck this, and take advantage of it. And then we should skyrocket away from it, put it in a new all-time high, come back down. Everybody wants to buy it, you know, and then we don't see it again. Now we come back down to it. It's like, oh, I'm buying it. And then it's like, uh-oh. And then we come back down to it again. And people are like, I'm going to dabble. So what's next? I'm selling it. F this. I mean, that's the, you know, right now it's like kind of neutral. Maybe it breaks back up. I should have took profits back up here at like 278. Not me. I took my profits at 300. And then it ran to 3 something. You know, I look real dumb here when I take profits at like 300, okay? And then it runs another like 10, 12% right afterwards. Same with Ford, okay? I was selling Ford at what, like 21 or 22? I can't even remember right now when I was taking profits on Ford. And then all of a sudden it pushes up to 27. Yeah, I look real dumb for about a week. And then all of a sudden it's like, oh, and we're down 20% in a single day. And then all of a sudden it's like, you know, and I'm not saying necessarily to other people, but to myself even, I'm like, damn, did I take too much profits? No such thing as taking too many profits. So Netflix is next. You know, I know people want to just buy the dip on Netflix, but I just do not like this, guys. I really don't. I know this is a popular one. and we are at a key ascending support line. We did hit the measure move breakdown here. We are building, man, we do have momentum on the TJD, TDMACD. We did get the hard buy signal coming out of the bearish control zone. All right, maybe we dabble, man, below the 200 exponential and got rejected. And the 200 simple looks like it's about to roll over too. And we're below the previous all-time high. Man, guys, I don't think so. Yeah, I just don't like it. The 821 have just crossed on the monthly to the downside for the first time since 2011. So it was in a 10-year massive parabolic uptrend. I mean, that was the bottom, though. I mean, initially, and then we pushed back up, and then we went lower. So, I mean, that would be a pretty aggressive move back up. 30%. I mean, I would run a tight stop on it if I was going to deal with this. Let's go back to a shorter time frame. I mean, you pretty much, you're playing the gap fill, essentially, is what it comes down to. So, what's the trade setup going to look like? Let's say we just entered right now. And we say if we put in a lower low, we do not want to be in this trade anymore. So, we run, let's say, 7.5% stop loss. I mean, the gap fill to the upside is 34%. And that's the retest of the monthly 821 cross. So, it's actually a decent trade setup. Technically, 7.5% to the downside with 34% upside. I mean, it's like 4.5 to 1. So if it's 50-50 chance it goes up or goes down, sure, it's not bad. But we are in a downtrend, so it's probably closer to 60-40. The trade fails. Momentum's in our favor. Netflix is a decent company, was overvalued. Probably a lot of people are trapped in their positions. So if anything, I would take this side of the trade. Well, I mean, we kind of already did that, though. Retested the bottom. I mean, you almost got to go all or none on this retest of 200 exponential and simple and the gap fill. I mean, it's not that you have to go all or none, but if it goes, if we break back above the bottom of the channel at 466, it's going to just go the rest of the way. I mean, with high probability. So maybe just a small position. There is a ton of support right here. Horizontally, we have a bunch of previous tops right there. So, yeah, okay. I could give Netflix 1 thumb up. Hey, give it 2 thumbs up, like the Fonz. Don't love the company, but the stock probably does have a push up here. We'll see, though. Who knows what's going to happen? I mean, like the stay-at-home orders may come back in, but because of war. So maybe Netflix explodes again. Maybe Zoom's back on. I don't know. We'll see. Apple had a nice little pushback up here from 200 exponential and simple, the bottom of the channel. The previous resistance turned support. Back at the top of the range again. Very strong compared to most things, but probably is topping out right here around 169. I mean, it pretty much just had one day move up, and then it's done nothing. I do expect this to roll back over, though. For now. I mean, bullish divergence, push up here. It's trying to go higher. We'll see if it happens, though. Amazon had a pretty weak move back up. This one did not put in a lower low here. No divergence. It's staying strong for now, but, I mean, this is just dead money until something happens here. I mean, even playing the range on this is like 12%, so. Google, basically double bottom with a little bit of divergence on the daily here. A little bullish divergence. Had to push back up, retesting the 200 exponential and simple. We have that yellow resistance support at 2674. Looking like it's having some trouble. If it consolidates here long enough, maybe it pushes back up and puts in a lower high. But if I had to flip a coin right now, I mean, that's what it is, though, really. It's a coin flip. We're right smack in the middle of the previous all-time high and the 236. So as far as I'm concerned, just coin toss right now. I don't like this just hanging out at the 200 exponential and simple. Again, typically this will get bought aggressively and then, move to the upside. You get one chance to buy it right here, and then we don't see it again for the entire bull run. So again, this looks very toppy to me. And these are the big boys, the ones that matter. Microsoft obviously retested that level. So, I mean, head and shoulders looking like it could invalidate. I mean, as long as it's going sideways here, longer goes sideways, less likely it is to play out. I don't like how not symmetrical this is, to tell you the truth. I mean, this shoulder is like long and drawn out, and this one's like short and sweet. Looks okay. Reclaiming 200 exponential and simple. I had some bullish divergence playing out right here. I mean, let's be real. The stock market's like just happy that it got 25 basis point confirmation from Powell. So stocks probably go higher on the short term. You know, did they go wrecked eventually though? I'd say probably. Probably. All right, let's jump over and chat, and we'll keep ripping through these assets here. XX Angel says on the daily chart, yeah, we can go look at Bitcoin right now, at crypto. So Bitcoin futures chart, obviously putting in a very similar pattern to what we were talking about on, was that net? Basically a W at the 200 exponential and simple, trying to reclaim these levels, 200 simple, trying to flip back over, consolidating at that range, at resistance. So we know a breakout to the upside is going to give us a measure move, either conservative from the smaller of the V's or, you know, more aggressive from the bottom of them. So I don't know what's on this chart right now. Oh, okay. Yeah, so apparently I don't even remember doing this. I might have thought I was on the regular chart and did it on this. I don't know. Regardless, if we break out from this, that's going to probably take us up from the neckline to retest our Fibonacci level, which was the 1.5 Fibonacci extension from the previous all-time high. Like the 20K, that was the Fib extension. This is the 1.618. So I think this is what you're talking about the head and shoulders if we get back to 50 Gs, which it probably looks a little different on spot chart. So you were talking about like one peak and then a double top that's composed of a head and shoulders, I'm assuming. Yeah, it's possible. I mean, if we break above the 200 exponential and simple and the slope flips back to the upside, I'm going to be bullish, honestly. I'm going to be bullish. I mean, I'm not going to just close my eyes and buy and just forget about it, but we've had zero false signals on this chart on the daily. So I will be very bullish if we start to confirm back above this and flip the 200 exponential and simple back bullish again. I think it's more likely that we get rejected here, possibly even just have like a wick rejection up and don't even close above it. But right now, man, I got to be bullish on this, honestly, if we break above this and confirm. Looks like we're about to get the hard buy signal on the daily also for the futures chart. So and then the Bitstamp chart, we already got the hard buy signal, got the nice push up since our Sunday stream, obviously, you know, on Russia, Ukraine, skirting sanctions, which obviously the government doesn't like. So I don't know why that's bullish. I mean, bullish short term for sure, but long term, I don't think that's a good thing. I think probably like the regulators are probably pissed right now. Like between what happened in Canada and now what's happening in Russia, I think they're probably salty. But again, we see that W double bottom. This still looks much more bearish than the futures chart. So these are just not really lining up just because of weekend price action, but overall telling us the same thing. We're still below 200 exponential and simple. We're still technically bearish, but we're very close to an area where we could flip back to the upside. So again, tons of indecision. Lots of people want to be hardcore buyers here. Lots of people want to be hardcore sellers here. We just got to see who wins. Got to see who wins. If we look at our weekly chart, we know that, you know, this is similar to what we did previously. We broke down the 821 cross the downside. We reclaimed that level, closed above it, and then we had an aggressive move back to the upside. So depending what happens on this week, still have 4 days to go. If we close below 42K, it's going to look bad. If we close above 45K, it's going to look good. So 42K, I think we go down further. 45K, I think we get a nice move up like this. And I will be buying or selling accordingly. But this is the situation we laid out ahead of time about how this could potentially develop into bullish divergence. This was our low. That was our low. Remember, we had the high right here and a lower high. We have a low right here and a lower low. Here we have a high and a higher high. Here we have a low and a higher low. So we have bearish divergence on the top of the range. We have bullish divergence on the bottom of the range. And what did I specifically say? I'm not going to give any more credence to one than the other. If the bearish divergence is developed and then we develop bullish divergence and confirm, I'm going to give it just as much credence. There's no reason we can't move back up and go to 78, 80,000 and put in another higher high right here and then break down from there. I see no reason we can't put in a new all-time high. The same way I see no reason the bearish divergence can't win and we break down from here. You know, at this point in time, I'm pretty neutral on Bitcoin, honestly, right here. I'm pretty neutral. I mean, we see here too, the hard buy signal confirmed when we left the bearish control zone. We have left the bearish control zone. We're close to confirming a hard buy. Now we had 2 green histograms and then 2 red histograms. Now we have another green histogram. So if next week opens up green and we close above the 21, I'm probably going to be bullish again. I really am. I'm going to just do what Bitcoin tells me. I mean, on the monthly here, you know, we're basically just range bound between 45 and probably those same levels and 38. So as far as I'm concerned, we're range bound between 38 and 45. A close below 1 is bearish. A close above 1 is bullish. So we'll see what happens. You know, and this is obviously on the monthly, so we got a long time before this happens. So, you know, we can't really trade off this, but obviously it's leaning more towards bearish. But that's my Bitcoin technical analysis, and I'm sticking to it. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Ethereum is next. Ethereum not doing anything close to what Bitcoin's doing. Bitcoin is much closer up here, retesting the breakdown. Ethereum looks weak. Altcoins in general look weak. Some look okay. But why do they look weak? Oh, that's weird. Because Bitcoin dominance is busting nuts in altcoins' butts. Look at this. 1, 2, 3 drives of bullish divergence inside of our descending channel. And then what happened? We're confirming the 821 to the upside, pushing back to the top of the range. So what's going to happen here? Well, probably we get to like 45, which we're at 44 now. You know, and I was saying at what, 39, we were going back up to 45. So we're almost there. We crossed 821 back to the upside, probably run into a little resistance, consolidate for a bit. The 821 on the weekly cross green for the first time since our cross down back here at 65% in February of 2021. What was that? What was February 2021? That's funny. So is this the beginning of a bear market and Bitcoin gains massive amount of value compared to altcoins? Or is this the beginning of Bitcoin going parabolic and altcoins just getting left behind? See, this chart makes me more bearish. I mean, when I look at the regular Bitcoin chart, I think neutral. It could go either way. When I look at this chart, it makes me bearish. Because what is the likelihood that Bitcoin breaks out to the upside and altcoins don't overperform? Every time Bitcoin breaks out, altcoins run massively. If Bitcoin goes up 20%, altcoins go up 40%. So that's not what this chart is telling us. This chart is telling us that more likely than not, Bitcoin's going to break out to the upside on this chart and gain market share. So either altcoins are going to do nothing while Bitcoin pumps, Bitcoin's going to pump massively while altcoins just kind of pump, or Bitcoin is going to break down and altcoins are going to break down really bad. Or altcoins are going to break down really bad and Bitcoin just goes sideways. But which of those scenarios lines up with what's more likely to happen? I mean, I think it's more likely. I just don't see a world where the market is full of retarded retards. Like, it's a bunch of dumbass cult members that are still banking on horrible, horrible crypto projects. There's, you know, whatever it is, 1,600. There's 2,000 shitty cryptocurrencies and 9 good ones. You know, and that might be generous. So for me, it's hard to see a world where Bitcoin breaks out to the upside and people don't just bet on altcoins to overperform. So to me, this chart says there's probably a higher probability that we do break to the downside. You know, which this chart would break to the upside, but crypto would break to the downside. We do have the first time on the weekly, the slope in our favor, momentum in our favor, a bunch of green histograms, hard buy signal coming out of the bearish control zone. We're approaching the bullish control zone already. The 8 and 21 are all but confirming to the upside on the weekly, 4 days away. but all they have to do is basically stay above 42. So Bitcoin dominance chart is looking, considering it's looking very bullish for a potential retest of the 200 exponential and simple, at least the top of the range. After that, it's the measure move of the range. After that, it's the retest of the 200 exponential and simple. And we know that when Bitcoin breaks out, the last time it broke out right here was in July of 2018. And we know this was the absolute peak of the market in January of 2018. So then we had Bitcoin shot back up to the upside and then sold back off. And then after that, it was goodbye altcoins, getting wrecked, losing 90% of their value, 99% of their value. Some of them are Bitcoin disconnected from anything. They're gone forever. So I don't know. We'll see. Doesn't look great. Does not look great. That chart definitely sways my opinion in one direction or the other, and not the good one. Total market cap looks okay. A little less bias here. I mean, again, if we close above, this one looks a little weaker than the actual Bitcoin chart because the regular Bitcoin chart's up here at 2 trillion. This chart's down here at the 8, likely getting rejected on the weekly. So again, if this closes above, it's going to look real good above 2 trillion, but the altcoins are underperforming so badly right now that even with Bitcoin all the way up here, the altcoins are way down here. So we're just sitting in the middle at 1.85. So again, this looks much less bullish. Still very much inside the bearish control zone. One green histogram, that's okay. We're starting to show a little life. Alts are really underperforming right here, and it's really dragging down the potential of like a legit breakout to the upside. And again, that's another that furthers my point. The alts are underperforming so bad right now that if Bitcoin started breaking to the upside and looking bullish, people would pile into all these trash coins trying to outperform Bitcoin. And then that would mean the Bitcoin dominance chart would be going down, not up. Which maybe that's it just topping out at the top of the range and then it has a retest back to the middle. Possible. It's possible. But seems less likely. So Solana hit our target to the downside, is now about to cross the 821 back to the upside, consolidating above our 382 Fibonacci. Looks like it's headed back up here to $121. That's like a 20% move. If this holds, Solana probably has a 20% move. Excuse me. Is there a trade setup here? Now, again, it's such a rough trade setup because it had such an aggressive move already. You basically have to put a tight little stop on this. It's got to be tight like a tiger. But a 20% move to the upside, 7% stop. It's like 3-to-1 risk-reward ratio if you entered right here. Or if I entered right here, because obviously this is not financial advice. I'm not your financial advisor. Market search can be volatile. Please your own research or trade responsibly. So 93 would be the stop. 98.50 would be the entry. Right, we're at basically right now, the 382. 20% move to the upside to retest 200 exponential and the top of the range. Second trade setup, or take profit on that trade. If it started to go in our favor, obviously we would trail the stop up to make sure that we didn't end up in a losing position if it got rejected. But the next target would be a 43% move back to 236 at $143 for our take profit. Same stop at $93 and same entry at $98.50 for a 6.4-to-1 risk reward. So there's some potential here. There's some potential in these altcoins. Obviously, saw a little bit of bullish divergence off the lows right here and off those key levels. Avalanche, but that thing is, Solana's kind of underperforming. Let's be real here. Oops. Avalanche having some trouble at the 0.5. It did tap that 786 perfectly, which was our next highest fib. So it looks okay for now. If it comes back up here and retests this 382 at 99, which it's at 80 right now. So that's like a 25% move. And it has confirmed the 821 to the upside. Man, I feel like Bitcoin's going to sell off here, but there's some potential. I mean, I really would rather get an entry off the 618, honestly. I would rather just be patient here. But if I was going to be greedy, I mean, I could enter a trade with 20% upside and 8% downside, 2.5-to-1. But again, I would much rather wait and get an entry off the 618, off of a higher low, and make sure, you know what I mean, that we don't take out that previous low. 6% stop loss with a slightly higher risk reward ratio, 28% upside, 6.6% downside. Maybe even take a small itty bitty position right now and then add or double it. If we pull back to the 618. so you don't miss it if it runs, but you're also not like, overexposed if it does continue pulling back. 4.2 to 1 risk reward ratio. Could work out. I mean, it could easily run away from us here, but I think there's some potential for that. On AVAX, the old avalanche. Matic, looks like it's about to get rejected off 200 exponential and simple, top of the range, 618 and 382. I mean, this thing looks like its trade already played out. Man, this thing looks like it's going to roll over. And maybe it puts in a third drive of bearish divergence. Probably not, though, because it barely moved to the upside. Or bullish divergence, sorry. My bad. I mean, it could have an aggressive sell-off and close like a daily below $1.30 or something like that. Doesn't seem likely where it's at right now, but definitely possible. I don't know. This one doesn't look... There's not much there. KDA looks very similar. I mean, it's at the top of the range. It's at the 200 exponential and simple. I mean, we could look at if it does get a breakout, if Bitcoin moves to the upside, if alts start to break out, if all of a sudden everything goes bullish, which, the bullish catalyst for Bitcoin is clear. It's like, remittance payments and like, decentralized store of value. But at the same time, it's like, well, do people really go to Bitcoin or do they go to stable coins? Statistically speaking, they go to stable coins. Ruble to Tether, ruble to whatever. Some of that money flows into Bitcoin, but who knows? Is that people speculating or is that actual Russians? Probably a little bit of both. So the altcoin bull case is a lot weaker because it's like not like, oh, there's hyperinflation in my country. My ruble is going to zero. Let me put my money in KDA. Let me put my money in Ethereum. Let me put my money in Avalanche. Much less likely, in my opinion, but possible. Maybe a combination of all those things. Maybe that's the catalyst for Bitcoin to break out and the alts to underperform, though. That's our bull case right there. Everything's bullish, but Bitcoin's more bullish because people actually need it and it performs the utility. But at that point in time, it's like, why not just get behind XRP? I mean, it's better, right? Oh, too bad I chased away the XRP army. How many years we've been doing this, guys? 2.5 years, and I finally said something nice about XRP. The one and only time. It will never happen again, so timestamp it. If we break out from here, I mean, we're at $7 right now, and the measured move is $19. I don't know what this is, but if it goes from $7 to $19, that's like, I mean, what, you retire off that, right? I mean, I don't think that's going to happen. It probably goes to zero, whatever this is. It's probably a dog coin. Let's be real here, guys. I'm just messing with whoever requested this too, by the way. Could be some great project, and I just don't know what it is. But the truth is, I don't know what it is. I mean, realistically, a lower low is 23% to the downside, but the measured move is 155%. So it's 6.79%. So, I mean, at this point in time, you're saying, okay, I'm going to risk $100. So I'll take a, whatever, $500 position roughly on this. And if I get stopped out, I lose the $100. But my $500 position goes up 155%. It turns into, essentially like $750 in profits, $1250. So that's how I would look at this. Rather than looking at it as I'm going to take a massive position and potentially lose 22%, I would look at what's the dollar amount I'm potentially risking on this versus the reward in that sense, which you can do either, but I don't like to look at it like that. I'd like to look at it more as like percentages and keep tighter stops. But when I'm running, a big, thick stop, I look at it as what I'm willing to actually risk. But I mean, realistically, a breakdown below this ascending support line is a no-go for me. If we start putting in a lower low than this previous one right here, because we have basically 3 higher lows, we have a high right here, a low, and then I would expect a higher high on this breakout right here, and then the potential move to play out. So, the first sign of, a potential topping and potential area, I would want to lock in some profits for sure, would be right around there. I would rather take some profits at like $9.95, and then let maybe like the other half of the position run or something like that, because that's going to put you up already at like 35%. I mean, there's no reason to get greedy on that. You know, on some hopium. Like, are you going to be mad if it runs 150% and you took profits after 35? I mean, you shouldn't be. But I can understand you're like, damn, should have got greedy. Let those winners run. But I mean, that's what I would be looking at. So, Kadena, KDA, you're the best. And then DraftKings. Wait, did somebody ask me to look at this, or is this just a leftover? All right, well, we'll just look at it really quick. I mean, at this point in time, it looks like it's broken out already. We had a channel going on, right? Descending channel. Okay, yeah. So we were just having an absolute meltdown. This thing was garbage. It was useless. Nobody wanted it anymore. You know, Kathy Wood, you know, what she called the bottom, where was it? Right here. Kathy Wood said the bottom was in, $42. She's down 50%. That's right in line with all of her funds. So now, I mean, she probably has sold out at the bottom. So it's probably ready to run now. Technically, that's closed outside the range. Now, we did have this little guy right here. So, I don't know. I don't even know if I like how this is drawn. Maybe that's on a longer time frame. Looks a little scary. Yeah, I mean, it looks like a breakout. It really does. So does this thing just run up right now? Measure move. Back to the 382. Back to retest 200 exponential symbol. God, it might. Ugh. Are we going to have to buy DraftKings? Is that about to happen? The old DraftKings. I mean, honestly, though, if this thing sucked on the Super Bowl, that should have been like it's time to shine. You got to just basically say if it loses this range, if it breaks back down below this range and starts closing back inside of this falling wedge channel, whatever you want to call it, below like $20, you're done. 12.5%. But the move to the upside is like 48% back to the 382. So it's 4-to-1 risk reward ratio. The measure move is slightly less than that. It could very easily underperform and just go to 27, which is $4. So it's much less appealing. But if it's a coin toss between this and the stop loss, it's not bad, but you're really banking on the measure move or the retest. You know, which it never really got a reversion to the mean. So maybe, I mean, this thing has been getting crushed. Yeah, maybe. I don't know. I don't love this trade, but it's probably worth throwing a couple dollars at. So there hadn't been a ton of great trade setups lately either, because most everything's been looking so bad. All right, and then gold had that pretty harsh rejection, had a pretty powerful candle afterwards, showing a little weakness, but looks strong. It really does. Hard sell signal, though. Does it roll over here? It probably does, but honestly, it's probably going to be a buying opportunity. Because, I mean, at this point in time, we retested the 618 on that sell-off, and it probably does go higher here. Gold probably does go higher. Now, if this fear trade ends and oil starts capitulating and gold starts selling off, I mean, this looks exactly like the 2011 top. So, wouldn't put it by gold. I would legit be ready to get back out of my positions on paper, not like, you know, like whatever you're trading other than actual physical gold. Wouldn't be like running to the pawn shop selling my gold. Silver finally consolidating back above the 200 exponential and simple, retesting the heart line. You guys know what I said. If we break back above the heart line, I expect silver back at the top of the channel. So at this point in time, this looks like a double bottom to me. Silver's at the heart line. If it breaks up from here, it's going to be that same move. You know, basically conservative or aggressive, you know, depending which one. Silver looking pretty good right now. I mean, the measure move probably, honestly, probably just takes it straight back to $30. So if we can get above this level, back to $30. If not, I don't know how many more chances this thing gets. I mean, come on, Silver. You could fucking do it. You could do it, Silver. Get the apes together, the monkeys, get the silverbacks, the gorillas, all the primates you can find. You know, even the ones with the colorful butts, the baboons. Get the baboons on it. And you guys can do it. Rally them up. Gold-silver ratio. again, you know, looking a little sketchy here. It looked like it was going to break back to the upside. Now it's looking kind of like a rejection. The longer it consolidates in the area and puts in higher lows, the more likely I think it is to break back to the upside. But if this does break to the downside, you know, it's going to look like this is already topped out and we just stopped at the 382, not my target of the 0.5, in which case I get ridiculously bullish on silver. Because if we start breaking, I think my mouse might be dying. If we start breaking to the downside from here and this starts rolling over, you know, we start talking about like biblical gold silver ratios, like 40 to 1. Maybe not biblical, but, you know, ratios we haven't seen in a long time. I think biblical is like 10 to 1, so let's not get too crazy. COPX, that global copper miner ETF. So back at the top of the channel, you know, retesting potential, you know, recent highs, recent top of the channel. Looking a little tired here. I mean, commodities, though, look strong. They really do. And as long as the inflation fears and the lack of food, energy, and, you know, stability and potential, like, you know, nuclear war, more likely commodities are to just run. I don't want to be the guy who tries to call the top on these things. Silver juniors are finally above the 200 exponential, trying to consolidate here, looking okay for the first time in a long time. Gold juniors, GDXJ, same thing, breaking out above the 200 exponential and simple, above the slope line, the channel that we've been stuck in since August of 2020, ready to do something, ready to have that measure move up to, I mean, at least that previous high in red, $55. $10 move on gold miners, 25% roughly, 22%. I don't know. It probably is topping out here. Maybe breaks out massively and then puts in bullish, bearish divergence and then sells off. I don't know. Gold and silver look so sketchy to me right now. It's just something sketch about them. I don't know why. I don't like to go with like my gut feeling on things, but I feel like I've seen it before. Well, I have in 2011. That's why. CCJ, Cameco. So obviously we saw the uranium stocks have a nice push up here. You know, a lot of that has to potentially do with, you know, obviously uranium issues, especially, you know, all this strife going on in the places where we get the cake from, that yellow. So, I mean, retesting a clear resistance right here. Was support right here for our little double top M pattern. Now, obviously acting as resistance. If we break out above this level, we probably go to new highs. $28, 10% above, and then after that, this thing probably just rips. It really probably just rips if we get above that. THCX, hanging out at the 886. I mean, this thing is like, pot stocks are dead. But now everyone hates them. They've been getting crushed forever. They're potentially getting ready to put in new lows. You know, we're still a little ways away from the primaries, but I think I'm ready to take another bite at these bad boys. I took a little entry off that 886. Might be looking to get back in around like, what, $6 or add to my position around there. I'm slowly building position down here. I'm scalping off parts of my positions on nice runs to the upside. But the truth is, eventually these things are going to turn around. You know, even if it's not this specifically, you guys know I look at basically the same ones all the time. Tilray, ACB, Hexo. You guys know what it is. Carbon, KRBN. Those credits. Carbon credits. What, man, we haven't looked at this for a while. We were talking about this right at the top, weren't we? There we go. Oh, yeah, we were too. Oh, yeah. Nailed it. That's hilarious. Okay, so this was where I was saying this was probably the top, right? And then we had the pullback, and I said we could possibly put in a new higher high on multiple drives of divergence. Man, it's been a while since I looked at this. I can't remember. I feel like that's what it was. But look, we came back up to the heart line, got rejected exactly, came back down to the bottom of the channel, 821 crossed under, consolidated for a minute, and then this thing just got wrecked. How is that a big move? It looks like a big move, but from the breakdown, oh yeah, down 20%. I mean, so what is that from the highs? Yeah, this thing has gotten wrecked. 25%, and it's, of course, it's at the 200 exponential and simple, and it has confirmed the 236. So realistically, got to look at this as a buying opportunity. The first retest down here, have to look at this as a buying opportunity. I mean, I would, we would have missed our chance already if I would have seen this and it bounced initially, but I mean, realistically, there's got to be a trade in here. 16% upside just to close the gap with a 4% stop loss. That's 4-to-1 risk reward ratio. Target is 48.91. Close the gap. Stop loss is 40.53, a new low on a daily close. I mean, realistically, you could have a really close, tight stop loss, but that would be below where that wick was at. But I wouldn't want to just get wicked out. I wouldn't want to see an actual daily close, lower. But the entry is right where we're at, $42. So it's 4.2-to-1. So you flip a coin. If we're wrong, we lose $1. If we're right, we get $4.24. And then multiply that by, how much we're willing to risk. I mean, this thing looks destroyed. I don't know what happened here specifically. I guess people were just like, this carbon credit stuff is bullshit. This is fucking bullshit. Kathy Wood probably bought right here. But that's it for today, guys. That's all we got. That is everything. I appreciate everybody for tuning in. Appreciate all the positivity. Make sure to smash up the like button. Tell your friends. Share it. All that good stuff. Quinn says February 2021 was a lovely time. Yeah, it was something, all right. Yeah, so appreciate everybody. Thank you to all the new group members and welcome. Once again, the group is closed for now. If you want to put your name on the list, that's fine. But no more members for a little bit here. I do appreciate everybody for joining, showing their support. Hopefully we got everybody's requests taken care of here. If not, remind me in the group and I will post a chart for anything I missed or whatever, or I can discuss it, etc. Yeah, that's it. Everybody be safe. Protect your principal. Obviously, crazy volatility in these markets, not just VIX-wise, but just in general. Literally anything can happen overnight when markets are closed, and we could see like 20% gap down or up. So no one's safe, not shorts, not longs, not anything. So but that's it for today. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. It is 9:55 p.m. Eastern Standard Time on Wednesday. This is our midweek market. And it is March 2nd, 2022. Remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here.